The committee recommended 3 months. Value-added tax. For the purpose of attribution or distribution, the committee recommended that the place of consumption of taxable supplies will be the place of consumption for taxable supplies will be irrespective of where returns are filed. In other words, all companies located in Lagos, Port Harcourt, anywhere, despite the fact that returns are filed from wherever they are located, or Plateau states, despite the fact that returns are filed from their location.
Even in Gibea?
Sir?
Even if they are based in Gibea?
So, we are there presently, sir. What the bill brought for us was to open up in terms of distribution for the consumption. That's what the president felt that needed to be done. And in his proposal, the president requested that the place of consumption should be the point of derivation of the VAT. So now we have agreed that irrespective, the clause we added is irrespective of where the returns is filed. And it's there, we have the interpretation clauses, they are all there. VAT fiscalization system. The committee included the need for further regulations by the service to get referred to the relatively new provisions of introducing a fiscalization system. Mr. Chairman, sir, the present system where companies file returns without federal revenue actually knowing whether they made that money. We want to deviate. This bill is proposing that we deviate from it. For example, Mr. Chairman, most of our supermarkets that take VAT on behalf of government, they don't remit. And when they want to remit maybe 30%. So the federal revenue did a practical example by going to a particular company, which I will not mention the name, and introduce their system into their own system. And they discovered that the company was actually remitting like 1/10 of what they ought to have been remitting. So we believe that if this is introduced by FRS to all commercial entities, Nigeria will start to benefit. Mr. Chairman, sir, we added in the bill before you that all companies must give access. They must give access to Nigerian Revenue Service to all their computer. In other claims, Mr. Chairman, the moment you buy an airtime in point A, it is seen by their own revenue service. But here, you buy airtime in point A or point B, or even closer to the office of FRS, they don't get to know because the law does not allow them. Now we are giving them the power, if you approve, for this. So the era of underpayment, under remittance will be over, and it will lead to more revenue for Nigeria. Information to be delivered by bankers and others. An amendment was introduced to allay the concerns of taxpayers in respect of the proposed information to be provided by banks by including the language for the purpose of tax to ensure that the information is not used for the purposes other than that of which it was intended. Similarly, the qualifying threshold for reportable transactions has been increased from 25 million to 50 million. The bill came with every transaction of 25 million must be reported by the bank. The returns must be filed to Revenue Service, and we believe that it will be too cumbersome. Apart from that, so many of our local businessmen are doing more than 25 million. And so, is it that every time they have to file their returns? So we increase the threshold to 50 million, for individuals, and from 100 million to 250 million in the case of corporate entities. Accreditation of tax agents. The committee has proposed the deletion of subsection 5, which implies that tax agents may be accredited by the service notwithstanding the qualification, experience, and certification of such persons. This addresses the concerns around the possibility of unqualified persons being accredited as agents. Currency of assessments and payments. Amendments made to this section ensure that tax is assessed in the currency of transaction and any liability is paid in the same currency. There were proposals that if you are assessed in US dollar, you should pay Naira as your tax. We said no. If the assessment is in US or Euro or any currency, or Shine or whatever the currencies are, you pay in that currency. And this, we believe, will assist us in our revenue. Power to distrain. Inclusion of the mandatory need for the tax authority to seek and obtain an order of the court before proceeding to sell movable assets belonging to taxpayers. The bill came with seeking our approval to sell anybody's property who refused to pay tax. And we said, no, there must be a court order for that purpose. That's the recommendation. Enforcement of powers. A new subsection has been proposed by the committee to provide for the taxpayer's obligation to provide password, access codes, and any such relevant details to access electronically stored information. This is deemed particularly important in view of the phasing out of manual storage of records and the increased volume of taxpayers' information stored electronically in computers and on the cloud. Power of the president or governor to remit taxes. Inclusion of the need to obtain the approval of National Assembly and States, House of Assembly for federal and state taxes, respectively, where the president or governor intends to remit. We argue on this, but we felt, let us just bring it to the floor, because we felt that there was no need to seek approval of national to remit taxes, but it's there for us. Power of the president to exempt companies from income tax. Inclusion of the need to obtain the approval of National Assembly where the president intends to exempt any person or class of income or profits from tax. In other words, if any company seeks to invest or you want to give tax credit to that person, you need to seek a National Assembly approval so that we don't continue to deplete our revenue and income. President, but yes. The power of the Accountant General to deduct at source. Similar to the above, the Accountant General is required to receive a resolution from the National Assembly in order to deduct any unremitted revenue due from MDAs. Mr. Chairman, sir, from our practice, we discovered that most of our agencies, they make revenue, but they don't remit, they spend the revenue. And unfortunately, they will claim that it is us that give them approval. We don't give such approval. So we are now saying that they must come to the National Assembly. The Accountant General has the power from by our resolution to deduct any of such money at source. Distribution of VAT revenue. For VAT purposes, a new basis for the distribution of the 55% and 35% respectively for state and local government allocation has been introduced thus. 50% to be distributed equally, 20% to be distributed based on population, 30% to be distributed based on consumption. Emphasis has also been placed on the actual place of consumption, irrespective of where the returns are filed. As provided by stakeholders and our governors and the Governors Forum. Offenses and penalties. The committee has proposed that the interest charge as a fine for contravening the law to be at the prevailing CBN monetary policy rate, rather than the initially proposed 2% above prevailing rates.